So it doesn't get any more textbook than this trade. It was insane. It was in Euro GBP. And what happened here is that you see you didn't make a good low. How can I see you didn't make a good low? Because right here you have a massive liquidity point. A massive liquidity point. Why is that a massive liquidity point? Because this is not a wyckoff for anything. This is just a wick. It's just a wick. If the low was like this, boom, 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 go higher, creating demand, then that demand is where you can come back for to go higher. But right now you only have that wick. You don't have a wyckoff schematic right here backing up that low. So that's a massive low. And right now I'm going to the fuck this, by the way. I'm going to the chart, and when you have a low like that, I call it a red circle low. So let's go to the circle and let's make it red. So that's a red circle low. That is your final target, and even your final target can be, of course, the low we were talking about, like this low. But what happened right here? You had a wonderful range. So let's see what structure is saying. Structure went lower, made a higher low there, and had some range in price action. So when you make a higher low, you draw your range from high to low, and that's your range. So right now you have a range from high to low, you have an uptrend, you have that red circle low, which is gonna be your target, which is a very important liquidity target. And what do you see here? You see your first deviation of the range. So your first deviation of the range, price going back inside the range, has acceptance back inside the range. That means you can extend your range right there, and now you can look for your tap 3, and your tap 3 was there, but there was no structure to break, because you need to break structure between tap 2 and 3, obviously, but that didn't do it, and I saw it right there. And right here, something very interesting happened, because you had a wyckoff inside of a wyckoff here. So if I draw my range right now, you can see you had your tap 2, you had your tap 3 deviating your tap 2, and here is your structure break. Here's your market structure you need to break. So for a wyckoff, you of course need that 1, 2, 3, and that is what we got right here. So we got a wyckoff right there inside of a bigger wyckoff right there. So this was your 1, this was your 2, because it deviated that 1, and this was your 3. And why do I draw my 3 all the way up there? Because in order to confirm your wyckoff schematic, you need to break structure between tap 2 and tap 3. But you didn't break structure. There is no structure in there. So there is no confirmation. So you went lower, you went higher, and you deviated that high again. So now you need to break structure between tap 2 and 3 still. But there is no structure break in here. So you deviated it again, and there you go. You have your local wyckoff schematic. This is what you want. This is an A+ scenario setup, because a wyckoff and a wyckoff suggests a very strong high and a very quick rotation towards that range low. And on the 45, let's see what's the highest time frame this range is valid on. You have a high right there, more than two consecutive bearish candles there. Here's your low. You didn't take out the low, which means there's a lot of liquidity below you. There is more than 2 consecutive candles going up right there. This is your tap 2. More than 2 consecutive candles going down. More than 2 consecutive candles going up. Right here, this is where it becomes interesting. Because right here, this is not your tap 3. There are no 2 bearish consecutive candles going down. That's why it's important to always watch the highest time frame your range is valid on. So there are no 2 consecutive candles going down, and there are no 2 consecutive candles going up. That means structure is literally going like this. So it's going like this, boom, 2 up, 2 down, 2 up. You go all the way to here, because there are no 2 consecutive candles going down there. If that went too fast, watch it again. And right here, you made a wonderful high. So now you're gonna watch what is structure doing, and when do we got a break of structure. And these candles are very big. That's some forex shit. Let's go on the lowest time frame, and let's see where is our structure break. You don't have structure right there, so you need to break structure between tap 2 and 3, and that's gonna be this point. So this point is gonna be your break of structure, and let's see if we are breaking it. And there you see there was your break. So there's your entry gonna be. This was a wick actually. So your entry, my entry was right there. Stop goes above the high. You target not the range low, but of course the red circle low, and the you can even target that low I was talking about. Holy shit, I couldn't get on it. But for a 2.2 RR, very nice. And I was saying in the beginning, I was pre-planning this, and I was telling you guys in the compound, I'm waiting for a break of structure there and a retest, and then go lower. That would be my ultimate scenario. So where is the extreme liquidity? And that's your first move up after creating the tap 3. So that's going to be right there. So that's your first move up. This is your extreme liquidity. That's what you want to grab. And then you can have a retest entry. But for now, I already had a starter position in there. And we went higher, and you had a very nice break of structure, which was also inside that volume profile. So here was the volume profile. That was the break of structure, was inside the volume profile. You see the volume profile was going like this. Very good distributed, yet some inefficiency right there. And the volume area high was there. You had a break inside of the volume area. So that's what you want to see. And what happened here is that price went up, took out that extreme liquidity point, and went lower. But right here, you didn't really have any structure. The structure you had here was this. So that would mean you add there. But as you can see, when you enter there with your stop there and you target here, your target is a 1.3 RR trade, and that's just not enough. My minimum RR personally is 2 RR. This was a 2.3 or something. So that was not worth it. That would not be worth it for me. You do have some supply creation there, and there is gonna happen something very interesting, because you do have an inefficiency here. You do have supply creation. Do we possibly, if you see it right now, don't give up on a trade. Don't give up on a trade, because this was an entry possibility. This was an entry possibility, but not following my rules because it's less than 2 RR. If we get a pullback into a POI like that, we can still trade it and go lower. So let's see if we got it. And there you see we took out that liquidity, but that's not enough yet, obviously, because you had no structure break. It was a quick move up. That this nothing, you enter and you create a range there. And now is what becomes very interesting, because you create a range, you have a deviation of that range. So right here, you create a range, you have a deviation on the higher time frame. This is just one tap. As you can see, this is one tap, this is one tap. So on a higher time frame, that's one tap. One tap, one tap. So this is your tap 1, this is your tap 2. And right now you're going to watch for your tap 3, preferably going into that supply. So let's see if we go into that supply. And there we mitigate it. So there you mitigate that supply POI you're waiting for all here on the 5 minute. It was a 5-minute supply POI. And what do you got now? Never give up on your trade. If you miss an entry, if you miss an entry again, never give up. What do you have here? A 1, a 2, a 3. So now you have a Wyckoff schematic, an internal Wyckoff schematic. So when you now know price is confirmed to go to that range low, because you already broke structure, you can trade this, short this, stop goes above there, and price goes lower. Why does your stop go above there? Because it's a Wyckoff. There's no reason for price, when it breaks this, to go higher again. No reason, because you have a confirmed Wyckoff. That is the whole system. So right now you're gonna watch for a break of structure on this low time frame schematic, and that was a bit hard, because this was your structure. So it was not the best RR trade when you only look at this low time frame schematic, but it is a very good RR trade when you look at the high time frame schematic. And look at this, guys. Look what happens to your RR right now. You have a 4.3 RR trade right here. A 4.3 RR trade. You already, and this is not even more risky because it's low time frame. It is not. You're already in a confirmed model 1 with a retest, which took, when you see price taking that extreme liquidity like that, it should already suggest you how clean this is, and that price is confirmed going to the range low. because you're already confirmed, you have that retest, creating 5-minute supply, price is going into the 5-minute supply with a Wyckoff, you short it, you fucking short it. With a 2% risk, 3% risk, you can high risk short this. So right now, price going lower and price obviously going to the target, and you have a 4.3 yard trade. It's literally that simple. Okay guys, join the compound, link is in the bio. See you on the next one. Ciao ciao.